It's Top That Trade time. The always entertaining Alan Nachman of Agora Financial and Phil Flynn, a Fox Business Network contributor, join us to go a few rounds. Guys, let's get it going. Round number one, crowded trade. Bank of America reports 74% say being long U.S. tech stocks is the most crowded trade in the market right now. In fact, it's at a record high of crowding in the survey's history. What does that mean to you?
Well, it means that we all know how crowded trades end. We're not saying that it's going to be the end anytime soon, but when everybody runs for the exits, you want to be the first out. So you want to be not the last in, you want to be the first out. And I still see more upside in tech. We just saw the S&P positive now for the year and actually making some new swing highs. So it looks like everybody's starting to play ball.
Yeah, and that's the problem, though. When you look at tech and you look at the S&P, I mean, the tech is up substantially on the year. The S&P is barely making it, and they're barely making it right now. So we do see a discrepancy between the tech, and that could be a sign that the trade is extended a bit. And I agree with you. It's still on a bull market, but maybe the time is to lighten up on tech and get into more traditional stocks. One of the reasons why that might be is why has tech done so well? Because it's really benefited by what? The coronavirus, right? Everybody's staying at home. They're using more tech. That's been a big thing. Netflix, everybody's staying at home watching TV, Disney, you name it. But now as we start to get out in the world and we start to reopen the economy, with all the stimulus, some of those other stocks will probably outperform or play catch up. So you might want to be playing the spread a bit, lighten up on tech, go long traditional.
Maybe.
Round number two, bankrupt buy. Amateur investors are loading up on bankrupt stocks such as Hertz and JCPenney. In the case of JCPenney, investors are pleading with a judge to spare them from a complete wipeout. The stock, meanwhile, has surged recently. What is your trader take on buying bankruptcies?
I say no way. They knew what they were buying. They knew it was a high-risk stock. And so to say, I want a part of this, it's there,
It's not high risk, Phil. It's called after they declared bankruptcy. According to the SEC, it's extremely risky and likely to lead to financial loss. That's what it says right there. So, what are you thinking? Maybe the company is going to reorganize. When they reorganize, they issue new shares of stock. You can make money in bankruptcy stocks, but you can't hold them till after bankruptcy. That's how it works.
There should be some specific.
There's plenty of other things to trade. You don't need to be trading. What are you going to go back into Radio Shack?
Round number three, banking it. The big banks had the worst quarter since 2008, but the stock market shrugging it off, hitting some new highs this week. What is your bank buy?
The stock I like is Wells Fargo. It got beat up a little bit again. It had its first loss on a quarterly basis in 2008. But if you look at it, it's traded between 25 and 35. So it could rocket out of this bottom because it was at 55 just back in December. So from a risk reward, that's the company I like.
I like the banks as well, like JP Morgan. I like Morgan Stanley. But I'll tell you another thing. It goes back, again, to when you look at these banking stocks, how good of shape the banks actually are in.
Time for the bonus round. The National Retail Federation predicts parents will spend more than ever on back-to-school items, especially on tech, as some students will study from home. How much will parents spend? It's closest to the pin.
I think $432.
$1,500.
The answer is $790. Alan, you were closest. You win.
I win.
Thanks, guys, for playing. Business First AM returns